Hello traders, welcome back. This is the very first lecture of the strategy section. In this section, you will learn the swing trading strategy for valid swing points. In the first 5 lectures on this section, you will learn about the basics of swing trading strategy, and then from the 6th lecture on to until the end of this course, you will learn the advancement of the swing trading strategy. So let's begin to know the swing trading strategy from the very basics. To trade the valid swing points, we will be focusing on 3 main steps. The first step is to finding a trend. Either it's an uptrend on a price action chart or a downtrend in a price action chart. The second step is to finding valid trading points on that trend. That means finding the higher low points in an uptrend market and lower high points in a downtrend market. As you already know from the previous lectures that the higher low levels are the trading points of an uptrend market and the lower high levels are the trading points of a downtrend market. And the third step is to finding strong candlestick pattern at the trading point of a trend. That means search a strong bullish candlestick pattern on the higher low point of an uptrend market which acts as a trend reversal pattern, like the bullish pin bar pattern or the engulfing candlestick pattern or any other strong candlestick patterns, so that we can confirm the end of the running bearish momentum and have the trade confirmation of the upcoming bullish momentum. On the same way, search a strong bearish candlestick pattern on the lower high point of a downtrend market. A strong bearish candlestick pattern on the lower high levels of a downtrend market indicates the end of the bullish momentum on that downtrend and predicts the upcoming bearish market momentum, which we intend to catch as early as it possible. Now, before explaining the main steps, let me warn you one thing first, which is very important, and that is never place a short trade entry in the uptrend market and never place a long trade entry in the downtrend market, because uptrend market is only valid for long trade entries but not for the short trade entries. On the same way, downtrend market is only valid for short trade entries but not for the long trade entries. Write these lines on a paper note and stick it in front of your trading desk. You should never break this rule until you have enough knowledge to trade the trends. There are so many traders who blows up all of their trading capital in a trendy market just because they place trade entries in every swing point they see in the market. But you must not do that. Instead, wait for the exact signal to trade long or short. Now let's explain the main steps with further details. For the first step, we need to look up for a trend. To identify trends, traders generally use indicators like moving averages, Bollinger Bands, and other trend identifying lagging indicators. But before you use any indicators in your chart, you need to have some logical trend confirmation signal in your price action chart. Moving averages are good for the eyes, but this does not always help to detect a valid trend. So how to spot a trend? Well, I have my own version to do that in a more simple way. At first, look at your chart. If the price is going towards the upward direction by making continuous higher highs and higher lows, then you are facing an uptrend momentum on that security. And if the price is going towards the downward direction by continuously making the lower highs and lower lows, then you are in a downtrend market. You will learn more about the trend confirmation in the next lecture, but for now, just concentrate on the main steps that we are going to need to trade the trends. Now, for the second step, we need to spot the trading points. Trading points are the area from where price starts to gain power to resume the current trend after completing the retracement. So we will look for the trading points to place our trade entries. So to trade in the uptrend market, always look for a higher low point where you can place your long trade entry. So higher low levels are the trading points in an uptrend market. And let me remind you again that never place a short trade entry in an uptrend market. Uptrend markets are valid for the long trades only. And to trade in the downtrend market, always look for the lower high levels since these are the trading points of a downtrend market. So we will only trade short at the lower high levels of a downtrend market. And again, remember that downtrends are only valid for short trade entries. Never trigger any long trade entry in a downtrend market unless you gather enough experience to trade the market as a price action trader. And now for the third step, to trade in a trendy market, always wait for until you find a strong trend reversal candlestick pattern at the trading point of a trend. In an uptrend market, wait for any of the strong bullish candlestick pattern to form at the higher low levels to trigger long trade entry. On the same way, to trade in a downtrend market, wait for any of the strong bearish candlestick pattern to form at the lower high points to trigger short trade entry. So these are the 3 main steps to trade in a trendy market. These types of trade setup carries the highest level of chance to win a trade. Because when you trigger a trade entry by following these 3 steps, then that means you have triggered your trade in the direction of the running trend. So you are actually trading with the majority of the traders on that market. And the trade in the trading point makes sure that you have triggered your trade from the very beginning of the push from the retracement level, so that your stop loss becomes small and the take profit level becomes very large. And then finally, a strong candlestick pattern gives you the confirmation of the end of the retracement and hence indicates that the market is going to move in your trading direction. So these are the steps you should always keep in your mind whenever you are going to trade in a trendy market. So many questions might be arising to you right now, but don't worry, I will cover all the necessary things you will need to know about swing trading but in the next following lectures. So in the next lecture, I will tell you about the trend confirmation method using real chart examples. So we'll see you in the next lecture. Until then, have a nice day and goodbye.